So in this video, I'll be talking to you about the prop firm trading. So what is prop firm trading? So say for example, you are a trader, you already have a proven trading strategy and have a good risk management, and but you don't have the capital. So what you can do, there are some firms which provide you the capital, the money to trade. Okay, and you can have access to up to 2 million of firm money, and you can have the larger the money to trade. So how does this work? Basically, there are multiple prop firms. I have already made the video regarding FTMO, then 5% is funded trading plus. There are also firm like funding pips, funded next and all. So they have the funding model. Okay, how they work, they will provide you the funded account, and they how they work. So basically you have to go through the evaluation phase. They have a three phase. The first one is instant, where you don't have to go through any evaluation, you can directly access their capital. The second one is one step, here you have to prove that you are consistent and you are profitable. The second one is two step evaluation, where you have to pass the first step, which generally require you to have the 10% of profit target, and the second one is about the verification. Then they will provide you a funded account. Okay, so how they work? Okay, for example, if you are having $100,000 equity. Okay, so if you start trading on your own money, so you will have the possibility of losing your entire fund. So the people who are having a restriction in terms of capital, but they have the skill, so what they can do, they can pay a very small fee, say for example $100 for $10,000 account. So what they will be getting, they have to pass the evaluation, whether it's a one step, whether it's a two step, and they will be getting a profit split, which generally start from 80% to 90%. Like in case of FTMO, it's 80%, then they scale it to the 90%. And when you have the hit the the profit target of your evaluation phase, then they provide you the funded account. And when you make the profit, then in your first payout you will also get your evaluation fee refunded. Okay, and the firm will be bearing all the losses. So this is how their funded model works. And I already mentioned you about the two-phase evaluation. So basically you buy their evaluation account. They will have the first phase target of 8%. Say for example, you complete that 8%, then they will move you to the second phase, which will be verification phase, where you will achieve the milestone of 5% without violating their rules. So they are having different rules. The rules can be having the drawdown of daily, for example, 3% or 5%. They can have the maximum drawdown of, so example, 8% or 10%. Some of the firm they allow news trading, some of the firm they don't allow the news trading, so you have to go through about that. So the main thing is about, you have to have a good trading strategy, you need to follow their rules. Okay, then you can have a funded account even with $100, and when you raise the first payout, you will get back your evaluation fees. Okay, so what is the difference between the prop firm and the retail funding? So the first, about the capital capacity. In terms of your own capital, you will having, trading with $500 or $1,000 or maximum $5,000, or maybe it depend on you, but there will be a possibility that you will be losing your own money. But where in prop firm, your capital might start with $10,000 or with $50,000, and they also have a different scaling option. So if you are consistent, then you can scale your account up to 500K with FTMO, or maybe up to 2 million. Okay, so like FTMO have a very decent requirement for scaling. Uh, they will review your account every 4 months, and if you have achieved 10% of profit target, which is only 2.5% on monthly, then they will scale your account to 25%. For example, if you start with a 10K account in July, you pass your both the evaluation in July, you start trading in August, September, October, and in November. In November 8, so basically you achieve a total of 10% of profit. So from December, they will scale your 10,000 account to 12,500. Okay, So the maximum financial risk, the it will be 100% of your capital if you are trading as a retailer. But in terms of proper funding, your capital or your risk is only limited to the evaluation fees. But once you pass the evaluation, then you will even getting it back. So it's a very good investment. Daily drawdown and overall drawdown, there is no rules in your own broker account, but in terms of prop firm they have a predefined rule. Okay, profit distribution, like in retail account, your own with your own broker terminal you will keep 100%, but your volume size will be lower. But in terms of funding account, it will be 80 to 90%, and even during the scaling phase they will scale to 100%. Trading psychology, there is no strict rule in standard retail trading. There will always be a fear of losing personal savings. There will not be, a restriction, but in terms of prop firm, it will be very systematic. Okay. What are the benefit if you are being funded? You can have a very large capital. You will have a with the scaling you can have good capital. Okay. It will allow you to enforce the discipline. Okay, because they have very strict rules. So you will learn how to trade as an institution. Your capital will be preserved. Like you will have no risk when you are funded, and you even with your first few payouts you secure some money, and you even get your evaluation fees. So means like it's like some people who are having a small fund, like for example even $100 or $200 or $300. So nowadays there are too much of market volatility, and there is too much of swing high and swing low. So what I advise to such people, that even like you learn trading and you just take up a small 5K account or 10K account just by paying 50K, and try to scale it in coming 6 months or a year. Okay, what could be the risk? Okay, the instant termination rule. So basically if you don't follow their rules, so they are very strict about it, then your account will be breached. And non-refundable fee burden, in some of the account they don't refund the fee, so that's why you have to choose the right broker. Verification anxiety, so sometimes the broker they clear, I mean the traders they clear the first phase, but they are more anxious and they make mistake in the verification phase. So these are the common issue. Is prop firm trading right for you? So if you are somebody who is disciplined and like who is very much motivated and passionate about making a career into trading in the longer term, then I think this is the best thing, because you will learn the discipline and you will make a career. Okay, and who should avoid it? So like if you are not having control on your trading journal, or if you're not using stop loss, if you don't have a edge, or if you don't have a system, like you don't have a boundary, like if you are being too emotional or doing the revenge train, then I think it's not for you. Because once you are funding, then you have to think like an institution, you have to think like a corporate trader, because it's a game of mindset. It's not like, it's not for somebody who is thinking to get rich overnight, or like aiming to make uh, 50% profit in a month and all. They are not looking for such people. Okay, so this is the small presentation about the prop firm trading. If you are having any question, then just let me know and I will answer that. Thank you. So in this video I'll be talking